Welcome everyone to Netaji Subhash Open University. We are discussing on goods and services tax, and today in this chapter we will be discussing on the methods of valuation of goods and services towards the levy of taxes. My friends, goods and services tax is one of the unique nature of taxation which applies to all goods and all services. And definitely a question that comes out, that on what value should we levy the tax? That means what will be the taxable value on which the tax will be levied. And the issue that comes out makes the law more complicated is that if the prices are available, like if it is a sale of goods, a pen which is sold out in the market to the customer at 10 rupees, without any biasness, without any relationship, without any influence on that particular price, that 10 rupees is considered as a value on which the tax was paid, whether it was sales tax, then VAT, even on GST. But the question comes out that if the price is not actually paid or payable for the supply, that means there are other considered. So there are price which is actually paid or payable for the said goods or services, then it becomes very difficult to understand that what would be the value of that goods or services towards the levy of GST. And that's the subject today. We discussed in reference or with reference to section 15 of the law with the relevant rules, and all these things they say the value shall be determined in accordance with the transaction value of the goods or services. And when this applicable? This is applicable when the prices paid or payable is not the only consideration for the goods and services. That means there is something else. Supplier and recipient are not related, means if there is a relationship, then the relationship may influence on the prices. Price should be the sole consideration. That means you cannot have like something in exchange, something in barter. You pay 100 rupees for the goods and also you exchange some other thing for getting this finished product, right? You bring your old watch and pay 75% of the MRP price. There is an exchange of an old watch to get a new watch, and also you pay 75% of the MRP. So the law says these are the complicated areas where the valuation becomes very difficult. Whether in that example, should say a watch, wristwatch, price is 1000 rupees, and there is a offer being made that bring any one of your old watch in your house, bring to us, and you need to pay only 750 rupees. So whether the tax, that is GST, should be payable on 750 rupees or should be payable on the gross value of the goods called as 1000 rupees. That's the biggest challenge, and the law says that this price 750 rupees is influenced by an exchange of another product. So it is the full value of the goods or services shall be considered as the transaction value and tax would be levied thereupon. This is the rule. That rule is called as valuation rules, read with section 15 of the GST law, When this sort of rules become applicable? Because the law becomes very simple if the price which is available to the customer, like my friends, you go to a shop, there is a item or product, the price mentioned as 100 rupees, you pay 100 rupees, come out from the shop with a bill, and the bill also shows, invoice also shows 100 rupees plus GST, no problem. The problem arises when that this price is influenced by somebody. So if you can have a look on the screen, you will find it out that when the buyer and seller are related person, what do you mean by related person? Holding and subsidiary. joint ventures, group of companies, the related relationships, a big list has been given where the two companies under the same management or a holding and a subsidiary company, right, the price of the transaction may be or possibly influenced by the relationship. And that's what this law says. Then when the buyer and sellers are related, then we need to follow the rule for determination of the transaction value. When the price is not the sole consideration, that means there are some other things, right? I just given the example. You bring your old watch, bring your old computer, take a 20% off you on your new laptop. You bring your old furniture, you bring your old refrigerator, get 1,000 rupees off on your new refrigerator. All these things could be possible wherein I am not paying only in cash, I am making certain exchanges. So the law says if the price is not the sole consideration for the sale, I need to take the help of the transaction value, and then transaction value says the fair market value, the open market value of the goods. So what is transaction value? I'll come after a few minutes of time. Number 3, reasons to doubt about the transaction value. That means there are certain questions that arises that if somebody says that a normal ordinary ballpoint pen is charged 100 rupees, or a pen which is normally available in the market for say 10 rupees, somebody says that it is transacted at only 1 rupee. You make it a doubt that the price mentioned is not a proper and correct price. In that case, you require to look for the transaction value. There may be a situation which is called as the pure agent, where you are acting as an agent and your actual price should only be the price of the original, that is the main principle. You cannot as an agent change the prices. Example, you are an agent of an airlines. You are making a ticket of Air India or Jet Airways or Vistara or something. Now, if the Air India's price is 10,000 rupees, you cannot make it 20,000 rupees, right? So what you can do, you take the ticket from Air India, sell it to the customer because the customer has come to your office, not to Air India's office. And since you are providing a service, you may charge 100 rupees or 500 rupees as a service charges. Now, if you change the price of Air India's that ticket price to a higher value, you never belongs to in the category of agent. You becomes a principal. So that needs to be also looked into this valuation model. And then any other types of irregularities that may come out during this course of transaction, during the course of this detailed transaction. In short, the value of supply of goods and services shall be the transaction value, that is a price actually paid or payable. My friends, please read this word payable, right? Paid may be something, but actually how much is payable for the said supply of goods and services where the supplier and the recipient of the supply are not related, no holding subsidiary, it is open market, and the price is the sole consideration of the supply. Price is the sole consideration of the supply. This is called as transaction value. That means open-ended transaction value. This is very important to understand the concept called transaction value. And the transaction value includes what it should include. It includes any amount that the supplier is liable to pay in relation to the supply, but which has been incurred by the recipient of the supply and not included in the price actually paid or payable of the goods and services. In other words, it's like to make the issue very, very simple. That means nothing extraordinarily is added thereto or therefrom. That means say if you take an example, air conditioner for say 20,000 rupees, the seller says, sir, installation free, but nothing is free. For the installation 2,000 rupees has been included. So the GST shall be, the tax should be levied on that full amount and not on that discounted value of 18,000 rupees. What the law says? What the law says? This law particularly says that the valuation rules is precisely drafted to find out the open market value. I repeat the word called open market value. And what is open market value? The market value means in a comparables, if you have got a similar pen or a computer or a laptop, go to a market, find it out what is the open market, everybody at what price they are selling. That's called open market value of the goods and services. The second method called as comparative method. That is, this method is called as comparative method. That means you are making a comparison from one vendor to another vendor. The second method is called as computed value method. What is computed value method? That means if you are not able to identify the similar goods and supply provider in the market or in the country, then need to find it out that what is the probable cost of production, the probable cost of processing, the cost of provision of the services, and then what is the generally expected profit margin for such goods and services. So, if somebody has asked me for a pen of say 10,000 rupees, obviously I will have a question that what is the cost of production, what is the cost of processing, what is the how much profit you are making. And if I put everything, it may maximum comes to 100 rupees. How you are asking a price of 10,000 rupees? So, the valuation model is extremely redefined under this present method. The number one method called as comparable methods, and number two is called as computed method, and these are all towards determination of the transaction value. There are other methods also has been prescribed called as a residual method, and the residual method says it is computed the value using the reasonable means of consistent which the principles and general provisions of these rules. A reasonable means, that means a common ordinary person, how he can decide or determine the value of any particular goods, right? That should be applied. First compare, second computed, then residually. The fourth important parameter of the rule of this entire process is called as a pure agent. What is pure agent? That means the agent, it's like the value. Give you an example to understand, to explain this situation. Say I am a practicing chartered accountant, or I am a architect, and my client requested me for a particular professional job. To carry out the professional job, I told that my fees is say 10,000 rupees. But to carry out the job, I purchased stamp paper at the High Court for say around 5,000 rupees. I engaged another advocate to get certain stamping at High Court for 2,000 rupees. There are actual transportation cost for going and coming to High Court and other places. That is also say another 3,000 rupees. And so many other expenses put together. I claimed 10,000 as my professional fees and 15,000 as a reimbursement. So total bill amount comes to 25,000 rupees. The question comes out, should GST be levied only on 10,000 or 10 plus 15, 25, that means on 25,000 rupees. This is also the valuation rules. And the rule says very clearly that as an agent, as a person of a chartered accountant or a chartered engineer or an architect, did I acted as a pure agent? That means whatever my principal has said that you get this much of stamp value, this much of vending, this time much hotels used to say, you should not make out any profit out of it, out of any transaction. You means the person should not make any ownership in that particular value of the stamp paper. The stamp paper should be purchased in the name of the principal and not in the name of the person concerned. Then only the GST shall be levied only on the 10,000 rupees, that is a bill value, and not on 25,000 rupees. If these conditions are not applicable, not validated, GST has to be levied on the gross value, that is on 25,000 rupees. So my friends, we have to be very careful in identifying what is the value for levy of taxes, because tax is going to be levied on the value, and obviously there may be a difference, and if the authority find that I have hidden something, I have not paid certain amount of taxes, penalty would be applicable. Right? Should be extremely careful about the valuation. We come to a close of this particular session, and definitely look forward to meet all of you in the other sessions of GST. Thank you.